What's going on, everybody? Welcome back to the Alpha Futures YouTube channel. Again today, my name is Ben here with Alpha Futures. Today we're going to be talking about how to grow a small trading account. So let's go ahead and define a small trading account, because first of all, this is going to be relative, right? To some people, $1,000 is a lot of money. Some traders out there, that's nothing. Just for video's purpose, I'm going to refer to a small trading account anything under $1,000. So if you're watching this video, I'm going to assume you are starting somewhere around $1,000, maybe a little bit over or under, but for video purpose, that's what we'll refer to with a small account here today. So first things first, with trading a small trading account, most people out there come in wanting to 10x, 20x that $1,000. Well, I'm sure you've seen it on Instagram. There are some traders out there that have been able to do it. Just to be completely transparent with you, people that typically do that are willing to risk and lose all 1,000 of that $1,000 trading account, which what they're doing is not necessarily bad or wrong, but that does not apply to somebody that's trying to learn the skill for the first time with only $1,000. We have to be conscious and preserve that $1,000, because that is what we are literally using to contribute towards our education and understanding how the market works. So coming in expecting to 10 or 20x that money as a beginner trader is not realistic at all. So let's talk about what is realistic now. I learned with something called the rule of 30. I love teaching this to new traders as well, because I think it keeps them on track, as well as a realistic expectation for growing a trading account. What the rule of 30 calls for is aiming to grow your account around every 30 days by 30% if you can. Now, this is realistic with a $1,000 trading account. Those numbers will get a lot lower the more you grow your account. For instance, making 30% on a $100,000 trading account is extremely difficult. While a $1,000 trading account, that might only be a couple trades on an options contract or using some sort of leverage, whether it be shares, futures. This is not a completely unrealistic target. It is ambitious for sure. A 30% return in a month is always going to be ambitious, but it is possible. So that's going to be kind of our ambitious target here, is grow the account by 30% in 30 days. Now, sometimes it might take 2 months, 3 months, 4 months, 5 months, a year. No matter what, if you're profitable at the end of the year, you're doing something right. So that's going to be our ambitious target, is grow the account by 30%, no matter how long it takes. Now, what this rule of 30 calls for, when I hit that 30% gain on the account, this is when I allow myself to maybe dip into some extra money from my paycheck or my job, allow myself to size up the account a little bit. So again, let's use that $1,000 example. I grow the account from $1,000 to $1,300. Let's say I have another $200 sitting around for my paycheck this week. I'm gonna go ahead and allow myself to add that $200 to my account. So now I am trading a $1,500 account. While this might seem like a minor increase, this might allow me to trade a bit more options contracts, be able to buy a few more shares on something I'm swinging or day trading. This will encourage the trader to, first of all, now be more invested in building their skill set, and it will allow them to trade a few more assets maybe they weren't able to before. So this is going to be emotionally and mentally encouraging to the trader, as well as literally putting them at more advantage they were at when they were trading maybe less than a $1,000 account. So we follow this rule of 30 over and over again. Again, that ambitious target is going to be 30% in a month on a small account. As you grow the account, that number is going to creep lower and lower, but we want to stick to that rule of 30, that we don't add more money to the trading account until we've proven our skill strong enough. We've grown the account by 30%. Now, that number you're adding to the account does not need to continue to grow. Let's say you have $1,000 sitting around from a few paychecks over the last few months. Unless you are consistently hitting that 30% target, I don't recommend just adding all that money to your trading account, because we want to naturally compound the account through our skill set rather than just adding more money month after month. But if you find yourself consistently hitting that 30% goal, I say follow the rule of 30 and kind of use it as little rewards for yourself to add to the account. So again, you can get that emotional and mental encouragement from yourself, as well as continuing to invest into this skill you're building. But I really like sticking to that strict rule of 30. Like, let's say I only return 2% on a month, or even I have a red month, because those will happen. I don't allow myself to add more money to the account because I haven't earned it. So this is a natural way that we can continue to invest in our skill, continue to scale a small account up, because I do know small accounts can be frustrating to trade while you're watching other people out there in the space making thousands of dollars, or just trading maybe even just more contracts than you have access to, whether it be futures, options, shares, or maybe some CFD or Forex traders, you're seeing people able to take more lots than you are. So now that we've covered the rule of 30, another thing I really want to hit on in this video is not over leveraging the account, right? Every single new trader out there is impatient. As I said, most people come in with the expectations that they can 10 or 20x the account just because they've seen it on Instagram or some other social media platform. Most beginner traders will immediately blow their first account, whether it be $1,000, give or take, within 2 weeks. That is something we see over and over again with beginner traders, and the main reason is they over leverage the account. And as I said, the traders you see on social media, the ones that are able to flip $1,000 accounts into $10,000 or more dollars, they're willing to lose all $1,000 of that account, which means they are taking trades when they are risking all $1,000 of the account on that one trade, or they're risking maybe as much as 50% of the account, which would be $500. I don't recommend beginner traders that are just trying to get a grasp on the skill do this. This is for those of you that are trying to aggressively grow the account, like we said, to 30% in 1 month. You're going to need to be risking, in my opinion, somewhere 3 to 5% per day on the account. Now, you'll see in the prop space, a lot of people vouch for 1% per day. I do agree with that on prop accounts because you do have risk parameters you need to stay within each day and each month, each week. But with a small account, if you are trying to grow it, as we said, by 30%, you do need to up your risk a little bit just to be realistic with all of you. But I think anything over 5% in a day on a small account, you are probably over leveraging that account and you can see yourself completely lose it as quickly as a couple days or a couple weeks. So I would say keep your risk on those small accounts between 3 to 5%, which just those of you that are wondering how much is that would be between $30 and $50 per day. I do think this is a pretty good place to start. Again, whether you're trading options contracts, shares, and then as you start to grow the account, you will get access to be able to trade some micro futures contracts. I do recommend staying between that 3 to 5% per day while you're trying to build the skill and grow the account. But as we use that rule of 30, compound the account both naturally with trades as well as adding money to it, I do recommend staying between that 3 to 5%. As the account grows, that's when we want that level to get even smaller and smaller, because obviously 3 to 5% of a $1,000 account, as we said, is only $30 to $50. But if you continue to compound your account up or get access to capital, you're trading a $100,000 account, that would be risking $3,000 to $5,000 per day, which some of you out there might be doing well enough financially, you can handle that. I personally don't enjoy losing $3,000 to $5,000 per day, and red days will always happen. So that's when we want to tighten up our risk a little bit. But for those small accounts out there, I do think $30 to $50 is a pretty good starting point. So I hope this video helped some of you out today. If you liked it, please make sure to hit that thumbs up button, drop us a subscribe, let us know any questions in the comments. I'll catch you all in the next video.